Hello, everyone. Happy Friday. We're bringing Bob on in a second for his take on the numbers this morning. They came in hotter than expected for the most part. Remember, we still have Michigan consumer sentiment coming up at 9 a.m., and then it's all quiet besides the rig counts. Market's sort of shrugging it off still. Your semi is still strong this morning. Only thing that's pulling back slightly is really Microsoft, and that's only down 39 basis points. You see every sector is up, led by basic materials. FedWatch tool, as of the last refresh a few minutes ago, had a 57% for a uh, June hike, and the probabilities have shifted to a hike, a pause, and then only one cut for November, December, and that one cut would take it back to where it sits now. So if they don't hike, it's, all the pauses are priced in and no cuts this year. Fear and greed index still solidly in greed. So let me get to see who else is here. Good morning, Martinez. Good morning, Jake. Good morning, Pep. Good morning, Royal Palms. Uh, we'll get Bob's take. A good Friday. It did not Did I understand that there's a public holiday on Monday? Yes, there's Memorial Day on Monday. Memorial Day on Monday, so it is a long weekend. Good morning, Heinrich. Sterling's putting in all the data we need. By the way, just to cover it real quick, Gamma Flip is 41.75. We're trading 41.68, so we're virtually at neutral gamma right now. There is some call gamma building at 4,200 again, so keep that in mind if the market just shrugs off the PCE numbers and rallies. And in terms of earnings, there was nothing really market moving this morning, so we're not going to waste our time with that. What we're going to do is bring on Bob. Good morning, Options 22. Good morning, Jacob. All right, let's get Bob's take on the numbers. Hey, Bob.
What's up, guys? So a
How you
couple of
doing?
things about these PCE numbers. Number one, the core month over month is going to be very troubling to the Fed. So I think that they're right to price. Well, we're pricing in another hike now as the highest probability in July. Last time I looked, and
Yeah, the
much
highest well, no.
did they
The
move
highest
it?
probability is still now June now.
Is it that shifted
56.3
right?
versus 50.1.
So right after the data, it was 46% for a hike in June, 70 some odd percent for a hike in July. And it looks like that has shifted to it being more a June thing. 56.5% is what I'm seeing right now. And July, it's 51% that we stay at that level. There's still some people pricing in a cut, 22%, that is just a 1 month, 25 basis point cut. That's not going to happen. If they raise rates in July, they're not going to cut rates. I'm sorry, if they raise rates in June, they're not cutting rates in July. That's idiotic. So, I mean, unless we have some sort of crisis, which that could cause them to do so. So, those are the dynamics I'm looking at right now. It's 21% chance, according to markets, that they raise rates in June and then cut them back to June levels, or to May levels rather, in July. That's not happening. Yeah, and then there's still for July. There's a 27% chance that they hike again. They still have substantial rate hikes priced in all the way through. The difference is we used to have rate hikes priced by the end of 2024 all the way to 300, 325. Now they're 350, 375. A lot of this is based off of Fed speak, and then the PCE numbers backed up what the Fed was saying. The most troubling part about this whole batch of numbers to me, personal spending, surprise to the upside.
Yeah, that was a
Personal
huge
engagement,
surprise to the
Republican.
upside.
Yes, a
Point
big
0.8 versus
surprise.
point
Point 0.8.
0.3 to 4.
Point 0.8 versus an expectation of 0.3. So, I'm sorry, 0.4. And then last month was revised higher. So, and this is all with slightly lower inflation data. So people are spending. Now you add on top of that, credit card applications are going through the roof. Credit card defaults are up. Car loan defaults are up. Mortgage delinquencies are way up. We're getting stagflation in the background in a very big way. And that's what's starting to develop in the background is stagflation. These stagflation indicators are going through the roof, and that's backed up by durable goods. Durable goods orders ex transportation, negative 0.2 is expected at negative 0.1. Ex defense, negative 0.6. There was no expectation from what I watched, but last was up 3.2. So the durable goods numbers as well. Now the month over month up 1.1 versus a forecast of minus 0.1. No, minus 1%. That was a big move as well. That's a month over month number. So all of these things are pointing to a still strong economy in the face of these high rates. So I've said this before, we either get a recession or we get a continued hawkish Fed. You can't have both. So the key metric to watch that to me is now we start watching the unemployment rate really closely. I don't even care about the number of people added because it's a mixture of growth in the labor force. The unemployment rate starts to become really important. And one of these days, we're going to get a spike in the unemployment rate. Now, we haven't seen the layoffs and the jobless claims yet. We haven't seen that. When they start to hit, because of the PMIs you saw, two things important for next week. The ISM manufacturing PMI in the U.S.
Which is Thursday.
The jobs date. Yeah, that's Thursday. And the jobs date.
Yeah, the jobs date is Friday.
Yeah, you can't start getting people applying for their unemployment benefits when we still have really strong additions to the labor force. So start looking for weak non-farm payrolls number. No, I'm not predicting that, by the way. Where's Paul? I'm not predicting it. I said start looking for it. If you start to see weaker and weaker additions to non-farm payrolls and the unemployment rate starting to go up, I looked back at the unemployment rate versus I shouldn't say all of the recessions, versus the recessions going back to 1954. There was one in 1957. Okay. Every single one, the unemployment rate spiked, but after the recession started. Every single one. The recession had to already start. You know, when you look at a chart, you get those grayed out bars where there's recessions.
Mm-hmm.
Actually, I can email you a chart really quick, Mike, if you want to see it.
Sure.
If you won't put it up.
Yep.
There it is. Okay, it's on the way. No title, no subject title.
Yep.
People talk about we can't have a recession because unemployment hasn't moved. But when you end up looking at when unemployment spikes, it's after the recession has begun. And I suspect that's because unemployment, number one, is the last thing to move. Number two, they designate recessions after they've already happened. So when they see that last piece, which is the jobs piece of the recession, then they say, okay, we had weak jobs as well. That's now a recession from here to here. All right. So anyway, that's what I took from this batch of numbers. Did you get that yet, Mike?
No, I'm waiting. Here it goes.
There it goes. There it is.
There it is. There you go.
So this is the unemployment rate. The gray bars, gray vertical bars is every recession, basically since 1954. People say you can't have a recession with jobs this strong. But what you see here is a recession had already begun as the unemployment rate started to reach its peak. All right. Now you did get a little bit of an upturn just prior to the recessions, very small. So like in the one where Mike's crosshairs are, for example, you went from about 4 to 4.3.
Yeah, you get little upticks. I mean, look at like this one.
Yeah, you get little upticks. And you can go all the way back to 1967, for example.
Yeah.
Little uptick. There's 1957. Now you got 1967. You just get these little upticks, And then everyone's like, okay, that's basically your trigger, along with all the other data that we're now in a recession. So anyway,
Well, the market's sure shrugging it off now. So when it shrugs off this news, it just wants to go up.
yeah, and that's okay. I mean, look,
Yeah.
it's a Friday. Would you short the Nasdaq on a Friday? I wouldn't. Not a
No.
long weekend. Who
No.
would
No, I
short
just
this?
go all in with a short on Nvidia.
Exactly. If you're going to short the Nasdaq, short Nvidia. Otherwise, you got nothing to short.
Which, by the way, that was a joke. I would not short any of the chips right
No,
now. There
short chip
is no
stock.
pattern, and you're fighting huge relative strength. So take that as a joke. Good morning,
But again,
PSG.
like
Good
the
morning,
last thing I
Patrick.
want to point out is I don't remember what it is. So there you go. When this empties, I have to go.
Okay, well, did you how? What's the time on that timer?
It's actually a 15-minute timer, so I have to go before this. But
Well, I'm just gonna. I mean, it's looking like the market's holding up at least so far into the cash open. So I'm just
yeah,
gonna go over
you'd
some.
expect that.
I'm just gonna go over some levels and then.
All
But
right.
what?
Any
Oh,
questions for
what?
me?
Oh, the 10-2s.
I don't see any questions for me except the typical Georgie Porgy questions, which are fun.
Well, we'll George save that one for another day.
Yeah.
Uh, yeah, Coco. See, I actually Nasdaq digested the PCE numbers quickly. It did.
Mm-hmm. Yeah, it did.
I mean, I agree with something Coco said.
Well, Coco engages in theater of the obvious. It's very easy. There's also a sky above us, Coco.
Where's the
I
yield on
once
the
had a,
10?
I once had a very large client when I was a broker. I'd call him every single morning and be like, it looks like the Dow's going to be up about 0.2%. Nasdaq's a little higher here. We got gold a little higher. Yeah, so call me if you're looking at anything. After about 2 weeks of that, he picked up the phone. He goes, let me guess, you're going to tell me where stocks are. And you're going to tell me where gold is. And I said, well, that's what I do every morning. He goes, call me when there's something I can't see on a screen. So thanks for that, Coco.
Don't
All
tell
right.
me what I can already see.
Yeah, tell me something I can't see. Otherwise, you're of no value to me. So, Coco, you are of no value to me this morning.
Oh boy. Oh boy.
All
But
right,
Coco
guys.
is still alive, so
I'll tell
uh
you something.
go ahead.
No, that's it. I don't have anything else. Okay,
All right.
yields
Well, thank you
continue
for
climbing. That's it.
dropping
Yields.
in and clarifying your thoughts on the PCE numbers and everything else, and we will see you next week.
All right, guys.
Have a
Cheers.
great long weekend.
You too, bud. See you.
Thanks. All right. Coco is correct. The NASDAQ sure shrugged off that data very, very quickly. Here's a little 5-minute chart. Boom and boom. And no, that's not a double top. It's not reversing a big enough move. We're going to have to just judge it into the open. And I would not ignore, again, please do not ignore the 9 a.m. number. And especially consumer sentiment was one thing, but really take a look at the inflation expectations. Because these popped up last time. If they keep popping with the final number and you get these hot PCEs, and then we still have low unemployment, as Bob mentioned, next Friday, it could, we could start getting some pressure on the market, but nothing yet. The trend is still solidly up, especially in the NASDAQ. Next level in the NASDAQ is 14,082. Then we have a huge cluster area, 14,126 to about 14,148. So if it just launches today, that's the levels I will be focused on. Key pullback level. Key pullback, and yes, the major double is still in place, although it could get validated today. But your key support levels coming in about 13,950. On the S&P, if we break above yesterday's highs, I'm really focused on this cluster right here, about 4184, 4185. Then we go to 4192, and there's a substantial resistance at 4192. And then the next harmonic is 40 to 199, and we have the call wall at 4,200. So keep that in mind. To the downside, if it rolls over 4155, 4155 area, 4150 to 4155, and then we have major support 4939 to 4942 area. The only thing is if we get to avoid below about 49.39, and we don't have a lot of support until right around 41.27 to 41.20. But daily cycle's now back at the bottom, so we'll keep that in mind, but that doesn't mean it has to turn up today. And remember, Friday, there'll be some interesting positioning going into flattening out this afternoon. The Dow, so far up, I'll be focusing on yesterday's high because it would be an intraday potential percent B buy. Oh, and again, only if it followed through into the close, but I will be watching for a break of that for any potential signals. Other than that, that would just be for a potential bounce back to 33,000, 33,050. So it's very, very scalpy. To the downside would be yesterday's lows where we have some pretty critical support. The Russell, again, overhead resistance. I'm going to raise this a little, give it a little more room. We have some key levels right about 1771. Key support coming in at 1741. Between that, it's still chop mode. I look more from the bullish side. If we go up, I'm looking more to the NASDAQ. From the bearish side, more to the Dow and the Russell. VIX, still interesting enough, holding above this 1835 level, but I'm going to be keeping an eye if we break below that. The DAX, still holding the key support zone. There's not much I'm looking for with the DAX, with it being a Friday and European close in, under 3 hours. Notes rotating back down to the 112.04 area and then 111.19. Not expecting it to get much below that 112.04 if it does push down in the open. Dollar index was pulling back earlier, and after the PCE data came out, you see a little spike back up and now reversing. So I'm going to be focused on yesterday's highs, which is also the harmonics. And then the next minor level is 104.19, but I doubt it's going to break out much above yesterday's highs potentially. Key support now is 103.50. Crude, there's still nothing. From my perspective, there's nothing besides anything scalpy. It was just a minor break of some resistance today. But anything is inside data yesterday. There's a fair amount of support and resistance, so it's only scalpy trading in that. Gold holding relatively flat after holding at the 1938 harmonic. If it does rally 1960 to about 1966 is key resistance. If it breaks down, 1921 is the next key level. Still, I'm focused on a further pullback. Silver at the final target of the double and a little reversal, but now I'm going to be watching to see how it reacts in the rotation zone. So this is not a long-term buy yet. Again, no long-term pattern. What else do we have? What else? So copper, little bounce here. Again, some of this stuff. We got a little divergence in copper, so I'm watching to see how it reacts in the rotation zone after the break from the diamond pattern. The yen trucking on up to the next target area. The next target area, which is some minor above there. Above there, we have, if it keeps going next week, 142 area. But we should not see much above was 140.60 today. Euro, not much new here. Any rally would be the rotation zone. I'd watch for a rotation back down, and the key resistance at this point is coming in about 107.70. Bitcoin, still nothing. Tesla, the big report out yesterday, but it seems to be shrugged off so far. Trading up slightly, so I will be watching to see if this gets into potential double top territory, which is to 189.28. We're trading 185.12 right now. Good morning, Todd. Would hold the 100 SMA? Well, right now, even if it holds temporarily, it's that we don't have a long-term buy pattern yet. I don't know if it'll hold today. I mean, you'd have to go off the short-term patterns, Pep. If you have a short-term pattern, but remember, it's against the rotation zone, so you have overhead resistance. And we don't have, this is not a strong bottoming formation. Hey, Heinrich, thank you. Remember, it's a long weekend here. There will be no stream on Monday. It's Memorial Day. On Monday, there'll be no stream. So, what's NVIDIA doing pre-market? 378. Focus. I actually have to set an alert right around these lows, because if NVIDIA breaks down, it could get interesting. And I'm not expecting a full gap fill, but it could get interesting. So I actually have to set an alert there. NVIDIA, we still had strength in stuff like AMD still gapping. This is going to get so interesting at some point. But we shall see. Nice CM's Comcast. Oh, that is, I didn't even see that one. Thank you. That didn't show up in my scans. Yeah, and that's completely valid. That is completely valid. Triggered yesterday. Pre-market looks like a slight gap up, but this will be interesting. Thank you for pointing that one out. Could be on the way back to, there's some key gap fill here. And 200 just below that. So that's an interesting. Another chip play. Oh, geez. There you go. The earnings yesterday. 56.29 would now be support. It's trading right at a prior high, swing high. So above there, that becomes the support. And then the next key, your next major target is 63.80. Next minor target, if it runs today, is about 61, 61.25. If it starts breaking below 58, I'd be hesitant on the bullish side. So that's where that sits. Oh, don't forget about the thank you, spiders. I forgot about the spiders and the Qs. Spiders, again, I'm watching. We're trading 415.40 right now. 415, 415.30's first level support. Then you got 414. Then you got about 412.50 to the upside. Key target 416.66. Above there, this is where the harmonics are right. 418. 418 is also this little low breakdown zone just above there. So it'd be about 417.50 to 418 would be major resistance on a stronger rally. And then if we do close above the 62.5, even today, and we don't hit 419.37, that would be my target for next week. The Qs, this is again why I love the harmonics. They give you areas to focus on. 342.27. Right now we're trading 340.71, just below yesterday's high. So the first target would be 340.95. We take out that 342 to 342.25. Then we have 344.50. Then 345.87. Not expecting that to get hit today. The support, the key support is about 337.40 to 337.50. And then you have, let me just see where the retracements would be. Roughly, you'd be looking about 335.20, 335, 335.30. And that would take us back closer to the daily rotation zone. But that'd need really weak internals to get that kind of rollover. So all right, I gotta run. Christo, remind me later. We'll have to look at Nike. Uh, I got to run into the open. Thank you for tuning in, everyone. Have a If you can't tune in this afternoon, have a great. It's a 3 day weekend in the U.S., so everybody here have a 3 day weekend. And if you're in Europe, enjoy a quieter Monday. I'll talk to everyone later. Bye for now.